A common question in the mortgage business these days is, how do I qualify for a loan? So that's something we're going to talk about. Welcome back. My name is Alvarez. I'm with MortgageWorks in Palm Springs. What we do is help people get qualified to purchase a home. So let's get right into that. The first thing to understand is where the industry is coming from is a borrower is going to be evaluated based on the concept of ATR, or ability to repay. What does this mean? What this means is a lender is going to determine if you have sufficient, stable monthly income to qualify based on meeting a debt-to-income ratio. What that's going to entail is determining what your monthly income is from various sources, and then also looking at your liabilities, as well as the proposed new mortgage expense, which will include principal and interest, taxes, insurance, or HOA dues where applicable, and then divide all that into your gross monthly income to meet a debt ratio requirement. The typical debt ratio requirement for a conforming loan these days is 43%. But some programs will go up to 50%, even higher if we get into, say, an FHA or VA loan. So the important thing to understand is, how is your income evaluated from the perspective of stability? Well, if you're on a base salary, that's pretty straightforward, right? If you're on an hourly rate, then you're going to be looked at to determine, are you working a full 40-hour week? And that'll be evaluated by looking at your pay stubs and W-2s to see if you have that consistent average. If your hours vary from week to week, then it's going to be calculated over an average, and that may bring down your qualifying monthly income for calculating that debt ratio. The other thing to be aware of is if you have variable income components, bonus, commission, overtime, or if you're self-employed, then generally speaking, a lender is going to want to see at least a 2-year average of that kind of income in order to calculate a stable monthly average. Sometimes 1 year is sufficient, but you can plan on at least 2. So if you've just started a job or a business where you're going to have variable income components, you may have to wait a while. The other important thing to understand is your liabilities. If you have any liabilities where you're close to 10 months or less on an installment loan, once you get to that 10-month mark, they will not be counted in the debt ratio. With student loans is another issue where people don't realize that they're still going to be counted in your debt ratio even if you have no payment because it's deferred. So there'll be an assumed payment that's going to be calculated. If you have revolving credit card debt, the minimum monthly payment as reported on a credit report will be used for that debt ratio. So obviously, if you want to prepare for purchasing the home, you may want to bring those balances down in order to get that minimum monthly payment down as well. The other issue to be aware of is your credit score. It's a very important factor in getting qualified. Unfortunately, in the mortgage business, you are a number. Your credit score is very important to determine not only your ability to qualify, but how your loan is priced. So to the extent you can keep your debts paid on time, or again, pay down those credit card balances, particularly under 50% of the balance, that'll help push your score up, which will give you a better chance in getting qualified. So with all these factors I just mentioned, where do you go from here? Well, that's where we come in. If you contact us, what we're going to do is we're going to evaluate all those factors and determine how much you can qualify and give you in writing figures for your maximum purchase price, your maximum loan amount, how much your down payment's going to be, as well as what the monthly housing expense is. It's important you know that information before you get out there and seriously start looking for a home. That way you know exactly what price level you can qualify for. We've been doing this for our borrowers, our clients, for over 3 decades. It can be a tedious process. Our job is to make it simple for you, get right to the point of what you can qualify for, so you can be more effective in shopping around for that home and making an offer. So if you're ready to enter the home buying process with confidence, contact MortgageWorks. I'm Art Alvarez, MortgageWorks, Palm Springs. We have the answers, they're on the house, and we can help you get the answers too.